Thank you, everybody, for joining. We will get started in a few minutes. We're just waiting for everybody to get back, and we'll let some people filter in. For those of you new here, be sure to join the Crypto CFOs community. It is now free and open to all members, so membership is no longer required. You still get all the same benefits, all of the great things that we offer here at Crypto CFOs, like today's session. I will post the link in the chat here. So if you're not in the group, be sure to register. It's free, gets you in, and you'll get automatic reminders to any of our CPE events, any of our open water cooler Wednesday calls, or demonstrations like today. You'll also have access to all of our partners. And of course, you can network with the Crypto CFOs team and everybody else that is in the community. So without further ado, I'll hand it over to Taylor, and he can kick things off.
Yeah, so today we're talking, I'm sure pretty much everyone on this call has heard about the new switch from a requirement from universal wallet reporting to wallet by wallet reporting, which there was a safe harbor provision that was you needed to elect before 1/1/2025. But if you haven't made any transactions yet in 2025, you can let your clients know that as long as they make an election before they make their first transaction, they're good to go. And we've had a lot of talk about what this is going to look like from a theoretical standpoint, but I really wanted to get together with Nick and the team over at Crypto Tax Calculator to talk about what does this look like inside an actual software, and what is this change going to look like practically speaking, so that those of us who work with tax clients regularly, we have a sense of how this is going to operate and how this is going to function in the actual software before we have to do it with clients. So that's why I got together with Nick. We actually had a nice conversation a couple of weeks ago about this at length. So if you want to know a little bit more about this revenue procedure, check out that podcast when it drops. It should be dropping in the next week or so. So there's that. If you need more info on the actual requirements for the shift from universal to wallet by wallet, look at that. Maybe Nick, if you could just give a quick brief overview of what that entails, and then how that's going to look like in the software, and then we can kind of do a more hands-on demo after that.
Absolutely. If you don't mind me sharing, I have a couple slides. Might help to gauge the conversation. I'm just going to share my screen here.
Sure. Brandon, just make sure that that's enabled.
Should be good to go.
Awesome. Thanks, guys. Let me just choose the right one here. Sorry, give me 1 second. It's not letting me choose the right tab. Okay, let's see if this works.
Nick, real quick
see
before
it?
we get started, are you open to questions during the demonstration, or would you like to wait till the end if anybody has questions?
During and
Okay.
interrupt me, wait for me to pause, whatever you guys need, whatever's best for you guys. I'm an open book. I've done this demo, a few times already. So if you interrupt me, I'm not gonna lose my train of thought or anything. So yeah, feel free
Sounds
to
good. All right,
just
great.
jump in. Cool. All right. Well, thank you all for joining. I'm Nick. I'm the head of tax here at Crypto Tax Calculator. It's a tax platform. Individuals, CPAs, CFOs can come in, use the platform, aggregate all the crypto data. So give us all of your source data from Coinbase, your Ethereum wallets, all that good stuff. We normalize the data, and then we spit it back out to you in an easily readable form. And then we run all of your calculations and eventually get you tax reports. So that's the general overview of the software. Give us all your stuff, we'll get you tax reports. But just wanted to quickly start with a couple stats here, because we recently did a survey and some of these stats are a bit alarming. So 62% of just a random sample of crypto taxpayers in America think crypto tax is not enforceable. So they think it's completely anonymous. They're like, oh, IRS is never going to find me. 43% don't even think you have to pay tax on crypto, which is pretty alarming considering, it's not too far different than stocks, and people have been paying taxes on stocks forever. And then the big one here, 70% believe that only centralized activity is taxable. So only what you do on Coinbase and Kraken is taxable. Everything else is not taxable. So just to kind of set the tone there, like this is what we're dealing with as far as education, in America.
One thing I
l-
want to highlight on that, I think, I think a big reason for that might be because of the 1099s. You have the 1099s that have been going out, not the DAs, but the
mhm.
1099s that the centralized exchanges had previously been required to send out. And that causes a ton of confusion for people because it may be completely irrelevant to their actual crypto activity in aggregate, but that's the only siloed information that these centralized exchanges have. And so that's what they're reporting to the US government. But I think that leads to the thought from a lot of people that, hey, this is the only activity that's taxable when I cash out to fiat, quote unquote. So just wanted to highlight that as well.
Yeah, absolutely. That's a great point. Just quickly moving on here. Okay, so just a bit about CTC and where we came from. So our CEO Shane basically had a bunch of on-chain transactions, had to pay taxes, had no idea how to get it done. So he built the software to do it. The softwares at the time, this was in 2018, weren't capable of doing all the DeFi transactions that Shane was doing. So he set out to build one. Um, Started, like I said, with on-chain activity and built into the centralized exchanges from there. It's a bit different than some of the competitors on the market who started more as a off-chain portfolio tracker. So, upload your centralized exchanges and they track your total portfolio across all of your accounts. And then they kind of slapped taxes onto that. Whereas we kind of went the other way. We started with the taxes and then kind of bolted on all those portfolio features after that. And taxes are obviously extremely complex. So um, we started with that. Moving on, we'll get to the safe harbor stuff real quickly. So just for a recap, the incoming regulations, obviously, I think we all know that you got to switch from universal to per wallet tracking. So what that means, universal, you can take all of your accounts, throw all of your transactions into one bucket, and you can use FIFO from there, right? So Kraken, Coinbase, MetaMask, they're all treated as one account, and then you use FIFO from there. Per wallet basis is much different. So now you gotta look at all of your transactions on Coinbase and do FIFO just within those Coinbase transactions, or HIFO or Spec ID if you chose that. Then you got to do it for MetaMask and Kraken and KuCoin, and all of your exchanges are now individual buckets rather than them all being one bucket of transactions. Um, it's tough. It's a tough switch, and I think the IRS knows that, and that's why that's why they released this safe harbor. So what is safe harbor? It's essentially just protection for the taxpayers. The IRS, like I said, they know this is complex. They know that a switch from universal to per wallet is not easy. It's not easy for CPAs that do this every day, and it's especially not easy for the grandmother whose grandson forced her to buy some Bitcoin and Ethereum on Coinbase and maybe had a MetaMask wallet or bought an NFT, right? So it's not just the high level CPAs that are doing this, but the very, lower tax knowledge citizens just in America, they also have to do this. So IRS understands it's complex, and what they did was basically gave a way for you to do this, a way for you to transition from universal to per wallet, without as much stress as it could have been. So if you're switching from universal to per wallet, like I said, there's two ways you can do that. You can do it via a global allocation or a specific identification allocation. What are the differences there? A global allocation is just that. Basically, if you have an unused basis in your account after switching from universal to per wallet, you can throw all of those unused basis into one bucket and then start distributing from there, right? So that's universal, getting all of your, if you want to call it excess transactions, put them in one bucket and distribute from there using, FIFO or whatever. A specific identification allocation is much, much more complex. This is you essentially identifying, or the taxpayer, you CPA on behalf of the taxpayer, identifying the specific basis that corresponds with a specific lot of asset on one platform. So what does that mean? It's a bit of a confusing way to put it, but that's a technical description. if you have one Bitcoin that you transfer from Kraken to Coinbase, right? Coinbase doesn't know the cost basis of that. Maybe they use the fair market value. Maybe they use zero. Maybe they don't use anything. Maybe they just leave it blank. Well, Kraken, they have the cost basis of that Bitcoin. So what the specific allocation redistribution method says is you can actually tell Coinbase, hey, I bought this Bitcoin on Kraken. Here's my purchase history. Here's the cost basis of this asset that now sits on Coinbase. So that's the other way. And hopefully you guys can see the difference there. One of them is you just put all these transactions into a bucket and start divvying out. This other one is, okay, this one Bitcoin has this cost basis, Coinbase. This other Bitcoin, Kraken, has this cost basis. And when I sell it, I want you guys to use that on the 1099 DA. Sorry, was there a question?
You have a question, Ken?
Sorry, guys.
Yeah, no worries at all. So that's the difference between, universal and specific identification. If you have used or wanted to use the global allocation method, you would have had to have made that by January 1st, that distinction. So we're February 5th now. So it's not to say you can't and you shouldn't do it. If you want to use the global allocation and you didn't comply with safe harbor by January 1st of this year, you can try to do it anyways. You can try to redistribute anyways. And the IRS, we don't know what they're going to do. They might say, no, that's not allowed. We're going to recalculate your crypto on our own. And this is what we think you should owe. Or they'll say, we understand you were a month late with the safe harbor. It's okay. We're going to move on. It looks like you did it correctly within good faith. So we'll accept it, right? So those are the distinctions there. On one hand, they say this had to be done by January 1st. So as a professional, that's the recommendation I'm going to make. If you didn't comply by January 1st, unfortunately, maybe you don't have the ability to use the safe harbor. As a practical standpoint, I would never give this advice to my clients, but thinking through the lens of the IRS, like I said, they understand it's hard. That's why they released this. That's why they just released, 2025-7, which is temporary relief for this. So try to comply anyways. If the IRS says, great, we'll accept it. Thanks, taxpayer, you did your due diligence, although it was a little bit late, we'll accept it. Otherwise, they're going to come back and they're going to say, hey, you didn't comply with safe harbor in time. Unfortunately, you don't have the ability to use that allocation method you use, so we're going to recalculate your gains using the method we want. Those are the kind of the trade-offs there. So I mentioned 2025-7. What is it? If you do choose to use that specific identification cost basis allocation where you're saying, hey, Coinbase, I bought this Bitcoin on Kraken and this is the cost basis I want to use, right? Well, that's step one is the hardest part right now, right? Step one is telling Coinbase what that cost basis is of that Bitcoin. Well, how does that happen? Does Coinbase create an entire platform in their tax center? Do they say, hey, taxpayer, go through Coinbase support to give us this information? Right. So if the broker doesn't have a way for the taxpayer to give them that information, well, then the taxpayer can't really comply with the safe harbor, right? So that's what this notice 2025-7 says, is basically you're using this specific identification method and you need to let your brokers know this cost basis for this asset. Go ahead and maintain the cost basis records within your own information, within your own data. And then once these exchanges and these brokers have a way for you to report the cost basis, then you can do it from there. So that's a bit about safe harbor and now this temporary relief period. I'll pause there for any questions. Cool. All right. Just moving on, how to kind of comply with CTC safe harbor using CTC. The big one here is this first one, this tax locking periods. What that means is that if you're a taxpayer or you're a CPA, doing an individual or even a business's taxes on CTC, you can lock the periods. So you can lock in the universal method from the date of their first transaction all the way through the end of 2024. Then you can switch to per wallet in 2025. Now, I just talked about that whole global versus specific identification allocation where you have these unused lots and then they get distributed out based on what you're going to do. So what CTC does is automatically does that for you. So the second you lock your periods, we're not going to change any of your settings or anything like that. But then if you wanted to change to per wallet in 2025, we're going to lock all of your 2024 and prior transactions so that switching from universal to per wallet doesn't change anything of prior year reports or transactions. Anything you've done in the past, anything you've reported to the IRS will be locked in. And then moving forward, you'll use all that unused basis that we automatically distribute. How does that work? I'll get into it in a bit later, but actually just I have the technical kind of response from our devs. So I just wanted to provide that. So if you lock a period as universal, so right 2024 and before, and then you change the cost basis to per wallet, you'll we will redistribute your assets based on least adjustment, which basically means we'll look at the basis you have on all these exchanges and compare what we have, and we'll make that record and that distribution to those different wallets based on what impacts your tax lots the least, if that makes sense.
So can I, if I think I understand correctly, so that would be like, let's say that the cost basis information on Coinbase, for example, was $10,000, and one of the basis slots we had was like 10,100. But then another one was 10,500. It would use the 10,100 one to attach to Coinbase because it's the least impact and closest to that number. And then it would find something else that was closer to the 10,500 and assign that basis lot to that other wallet.
That is exactly correct. Yes. Yep.
Cool.
So essentially we try to do it so it impacts your taxes the least, right? So you don't want to switch to per wallet and all of a sudden see a 10x gain that you thought, maybe wasn't there or whatever. It's shocking to you. So we really tried to do it for the taxpayer because obviously we're automatically doing this for them, right? We're making decisions on their behalf. So the decision we chose is how do we do this without impacting them at all, really? So that's kind of what we settled on. And I think I've seen some other competitors in the industry start to release features like this. I believe we were first. We released this, I believe, in November of last year, maybe early December. And I believe this is pretty standard here, the way we're doing it. Okay, just moving on, a couple slides left. Just real quick, we have super detailed on-chain support. Like I said, that's where we started. So Jupiter, Magic Eden, Uniswap v3s. We've done tons of Solana updates. So our Solana integrations, top tier. YCTC, double entry accounting. We're not going to make any assumptions for the taxpayer. We need all the information. We need all the data. Otherwise, there's going to be gaps in the reporting that need to be filled in by the taxpayer. And again, we're pretty country specific. So we support 23 different countries and their specific tax laws. Outside of those 23 countries, we basically support every country in the entire world, just with basic reporting. So, capital gains reports, income reports, things of that nature. Just some, why accountants trust us, some testimonials. I'm not going to go into them too much there. Some of our official partners, you can see some big ones on there, Coinbase being our biggest. And just a little bit of my contact info if you guys want to take a screenshot of that or whatever. Happy to talk with any of you individually or whatever. Just feel free to send me an email, send me a message on LinkedIn. I'm pretty reachable. So that being said, that is basically all I have as far as a presentation and any slides for you guys. So next, I would like to go into the actual demo using CTC and kind of showing you guys how all of this works. So let me switch over to this. Sorry, guys, give me 1 second. Okay. Are you guys able to see the screen? Can you see the CTC interface?
Yep.
Perfect. Okay, so this is CTC. This is the accountant portal. So if you're a taxpayer and you're just logging into like cryptotaxcalculator.io and you create an account, it's going to be a different UI. So the UI you guys are seeing is for accountants only. So if you have clients, multiple clients, you're able to manage them all here. That's really the biggest difference, is just being able to manage multiple clients rather than just one account. So I'm just going to give a quick 2, 3, 4 minute overview of CTC to give everyone a bit of a context, and then I'll start diving into some of the meat of the session. So as I said, you create your client or your accountant profile. You can create new clients here. You can create a client name and then select the country. So you can see some of the specific countries we support. If you're, a country outside of this, again, we can support just basic tax forms. So then you can add the client down there. So I'm going to do that. And then let's say, so you can see here how this plan is a business plan. Well, let's say you wanted to upgrade your client to a business. It's not an individual, it's a business you guys are doing. You just go to client settings, a plan, and then you can upgrade them to a business. So it's $9.99 per year. And I'll go into some of the features more briefly, but that's for any businesses that have crypto on the books and need to push to like QuickBooks or Zero or whatever. And then the individual plan is just our individual plan, $49 for the most basic package, about 100 transactions, up to $500 for 1,000 or 100,000 transactions. If your client has more than 100,000 transactions, just reach out to us. It's not that we can't support you; it'll just be more specific support. So just like I said, reach out to us. Okay, so here I'm going to go into this first test client. We're going to actually start getting through some of this. So I already have Coinbase data loaded into this account. But step one is always to load up your data, right? We want to create that daisy chain of data. What is a daisy chain? Every single transaction that the user has ever done, we want to upload into here, so we're not creating gaps. For example, if you only upload Coinbase data like I have here, but I've sent crypto from Kraken to Coinbase, as I mentioned earlier, Coinbase isn't going to have any of the cost basis information from the purchases on Kraken. So we need that Kraken data to kind of close the gaps on that 89.49 when we build it out. Otherwise, your gain in Coinbase is just going to be the full gain with the zero cost basis. Okay, so what do you do from here? You add all of your accounts. Like I said, I have Coinbase uploaded. We support thousands and thousands of integrations, so different blockchains, exchanges, wallets. So if you start scrolling through, you'll see some of the ones we support. Lots of complex ones, brand new blockchains, Hyperledger blockchain, things like that. But for ease of this demo, I'm just going to do crypto.com and I'm going to upload a CSV. So it's pretty simple to get your data in there. You can do many ways: APIs, CSVs, OAuth connections. You can add manual transactions. You can add your own custom CSV. We make it super easy to get the data in to CTC because that's really the most important step, is just getting us all your data. So once you have that, you'll see it's now populated here. So once you import your data, you can take a look in your transactions. Don't worry about all of this stuff here. We'll get to that. That's for the accounting. And then you can, like I said, see all of your transactions. So you can do filters. You can add an import type. So I imported via CSV. So this is all like the crypto.com transactions. So you can kind of play around with the filters and see all your transactions. Once we have all of your data, then we spit out some tax reports for you guys, so you can see your total gains, any income from staking, rewards, mining, things like that. That'll show up here. Obviously, you can see there's some errors because there's a savings opportunity. Sorry, Blaze, not right now. And that's because we don't have all the data, right? So if there's any errors in your data, you go to this review tab and you'll actually, have to review it. So I have, just under 1,300 transactions, and CTC classified basically everything except for 3. So we're super good with all of your transactions, can basically handle anything you throw at us. And if there is any errors in the data, you're gonna just want to eliminate them. So you're gonna want to categorize. So this, right, it's a deposit of some crypto. I'm going to mark that as income. Sorry, get that out of there. I'm gonna mark this as, maybe a fee. Okay, I'm sorry if I Okay, popped up a couple more. That's just because I have so much unreconciled data in this, kind of at the mercy of the demo gods right now. But let's assume I just categorized all of these, so you can see like unknown sources to my Coinbase account. It's because I haven't actually uploaded all of my data here. If I uploaded all my data, for example, my MetaMask account, this transaction of 18 DAI will be fully reconciled, and it won't be flagged because we'll have, the source of the information. So let's pretend I reviewed all of that data. Once you reviewed all of your data, you have no errors in the data. Now you're at what we consider a daisy chain. Once you're at that daisy chain of transactions, then you're able to move on to the next step and comply with the safe harbor. So again, for purposes of this demo, let's just assume everything is reviewed and there's no errors here. What you're going to want to do is you're going to want to go to the client settings, and you're going to want to go to this locking period. This is like step 1, I guess maybe step 2 of complying with safe harbor and switching from universal to per wallet. Step 1, getting all of your data in there and making sure it's fully reconciled, making sure there's no errors, making sure we have all of the sources. Step 2, you're going to lock your periods. So you can choose from basically your first transaction or whatever you want through the end of 2024. So I'm going to save that locking period. And as you can see, we ask you to address some of the issues before you do that. For ease of the demo, I'm just going to assume that happened. Oh, I'm sorry, I clicked the wrong thing there. Ignore and lock anyways. Cool. So now that we've locked all of the data, what we just did was taken a snapshot of all of your tax lots. Tax lots are basically where you hold crypto and what the basis is. So you can download these and you click on them, and what you can see here, and this might not coincide with the actual data. Maybe I'll just download it. Oh no, did I just remove it? Okay, sorry, I just removed it. So I'm gonna do an inventory snapshot and download a PDF. You can do one here as well. Download those PDFs, and once those pop up, you can see exactly, okay, so my Bitcoin, let me zoom in for you guys, because this is pretty important. This report is all of basically your holdings and your tax lots after we distribute them. So it's always good to go in and check, like, did we do this how you want? I said we automatically redistribute for you. Does it make sense? So the Bitcoin I have, Bitcoin on BTC markets. I have 1.5 Bitcoin with a cost basis of $40,000. I have another Bitcoin on BTC markets with a cost basis of 45,000. Then I have more Bitcoin on Amber, that exchange or wallet, with one with this cost base. So you can see it kind of breaks down where your crypto is held, every single lot, and what the cost basis is. If you have 100,000 lots, this is going to show 100,000 lines. So the more you have, the more inclusive it'll be. So I'll pause there. If there are any questions, I'll take them. Otherwise, I'll kind of recap everything I just said.
Yeah, I got a quick question for you, Nick.
Mhm.
Yeah, so just so I understand in your example, you had Kraken and Coinbase, and there's a cost basis issue with Coinbase. So at the end of the year, let's say 2025, we've already locked this in CTC, and will that information, like, usually we, have to reload the information from Coinbase. So will there be an error message, or how will that, or is that kind of jumping
That's a
the gun?
great question. Not jumping the gun at all. Great question. So let's say you come in April 1st, 2024, or 2025, sorry. You do all of the 2024 taxes, but then you don't touch the account until April 1st of next year to do the 2025 taxes, or if it's a business by the end of the year, whatever it is. There will be an inherent syncing that has to happen within like Coinbase or whatever data you uploaded to get us that new data. If you have any transactions from the last time you gave us the data, then we'll have to pull that data. You don't have to reconnect the count or anything, Josh. You just have to let CTC do it. We have a little button up here that's kind of like a refresh, or you can go to your integrations and refresh it here and resync it. It's not going to impact anything that's locked. So whether it's directly from Coinbase, right? Coinbase gives us the purchase history for one Bitcoin that you purchased in 2022. If you lock that period and then you re-import like I just did here with Coinbase, it's not going to change that transaction. That's still going to be locked. It's never going to be edited. The same way as in, let's say we get that data from Coinbase, one Bitcoin you purchased $25,000. That's the data we have. If you manually adjust that transaction, and let's say you just make it 10 Bitcoin for whatever reason, and then you lock it, when you resync Coinbase, well, the Coinbase data is different than what you entered, right? Coinbase gave you one Bitcoin, you just entered 10. We're going to keep the 10 Bitcoin. So we're not going to change anything that you've done. Once the transaction is locked, we're never going to reuse that basis for a sale for, the cost basis. We're never going to edit it. We're not going to do anything. So once it's locked, it's locked. With that, once it's locked, it cannot be edited further unless you unlock it. If you unlock it, then you have to kind of unlock the entire period, and it's not super friendly right now because it might adjust some transactions. So what the team is actively working on, and possibly might even be released by the time I'm saying this, is an unlocked period. And I know it's confusing, all the wording, but essentially it's a locked transaction that you can edit, but it'll never be adjusted after that. So for example, in the situation I was talking about, you make the edit to 10 Bitcoin and you lock that. If you're using our unlocked period, so to speak, you can actually edit that 10 Bitcoin again while keeping every other transaction in that period locked. So if you had 10 transactions on the same day, you can edit one of those without impacting anything else. So that'll be released, if it hasn't already, very soon.
So rather
Does
than
that answer the
unlocking the
question?
whole period, you would unlock just that one specific transaction for editing purposes, and then it would do whatever impact that makes on the whole data set, and then you could relock that one transaction as part of the greater whole.
Exactly, correct.
Does that answer your question, Josh?
Yes, thanks a lot, Nick. Appreciate it.
Of course, yeah. Sorry, that was a long-winded way of saying no. We don't really edit anything if it's locked. Okay. Any other questions? That was a great question, by the way. Cool. All right. I will move on to a little bit more of a detailed demo of CTC.
Sorry,
Yeah,
I
go
have
ahead,
a quick
Taylor.
question. So, let's say I have a client that maybe we were missing some cost basis information. We just never really got it from them. And we decided to and we hadn't had that resolved by the time 2024. We needed to lock the periods for 2024. Well, that'll just assume a zero cost basis and then just move on from there. And you can see, I know that in your tool, you can see the different gain loss impact that can potentially have if you have zero basis. And so if the client is comfortable with the $500 potential impact on their gain loss because we couldn't locate the data, we just would plow through, hit lock, and then it would just automatically assign a zero cost basis to that information and then distribute the remaining basis as needed.
That's correct. Yep. So it happens. I'm sure you're all familiar if you've had a crypto client. 99.9% of every single client will have some sort of missing data, especially if they're complex. They're going to forget a wallet. They're going to, whatever it is. What CTC has is this really sweet, awesome feature is that down here, right below your crypto integrations, we're going to recognize the transfers in your account. So if you're on Coinbase and 5 years ago you're on Coinbase Pro and we see transfers going to Coinbase Pro, but you never gave us that data, we're going to actually recommend it down here. So it's going to say recommended accounts Coinbase Pro, and it should jog the client's memory. Oh, I have a Coinbase Pro account. Oh, I have a MetaMask account. Oh, I have this other account that they're asking me to import. So ideally we get to a position where, we're not missing any data. But Taylor, as you mentioned, if we are missing the data, the client's cool with it. You continue to lock the period or whatever, it will assume a zero cost basis. So you'll take the full proceeds as gain. Cool. All right. Just gonna move on. This account that I'm looking at is like a business. So if any of you guys have businesses interacting with crypto, we have some, accounting integration. So this account's connected to Zero, and we're pushing crypto data as journal entries to Zero. You can chart all of your accounts, right? Your fees, all of your realized gains. If you have missing purchase history, where does that go? And these I just kind of click on for ease of demos. They're not, 100% accurate, so don't get too bogged down on those. Another cool feature of our accounting product is the address book. So your identified addresses here, that's everything you've entered, right? So you can see some payroll wallets, my Coinbase that I've entered. These unidentified are basically, we're looking at your data and we see that you have a transfer going out. That wallet is the unidentified wallet. So for example, like, let's say this 299 amount I sent on, January 25th or whatever. Let's say this is Taylor's bonus wallet or whatever. So I just basically identified this address as Taylor's bonus wallet because me as a business paid Taylor $300 for Merry Christmas. Here's $300 bonus, right? So now that that's an identified wallet here, anytime I send money to Taylor, it's going to be identified in this wallet. And you can set a rule on that. So you can see the rules here. So what is the rule? So we've identified this address. Anytime we have this address and account is Taylor's bonus, then we can add an operation. It's going to go to a P&L account. And the account is going to be, there should be a wages. Yeah, wages payable, right? So now we've just set a rule that anytime my business wallet sends Taylor money or crypto or bonus or anything, it's going to automatically get charted in Zero on your wages payable account. So you can kind of start to see how with these rules, you can sort of 100% automate all of your crypto accounting for businesses. You can order the rules, right? So you can see there's different payrolls. If you have a rule that kind of trumps another rule, let's say like this is Taylor's wallet, I'm paying a bonus, goes to wages and payable. But then for whatever reason, I accidentally created a new rule that says, this is Taylor's bonus wallet. It goes to cost of goods sold, right? If your cost of goods sold rule is numerated higher than the bonus, the wages payable rule, the higher one will trump. So whatever rule is number one, that will always be applied. If rule number 14 contradicts rule number one, we'll never apply rule 14. Does that make sense? Okay, cool. Question in the chat I'm seeing, any integrations with AML tools on the roadmap? We don't really collect PII. We don't ask for social security numbers. We don't report to tax authorities or the IRS or anything. So we probably don't have too much on the roadmap for AML or KYC or sort of anything like that. There's no need for us to do it. All we ask for is an email address. You can give us a fake name, you can give us fake basically everything, and still download all of our reports and then upload that with your tax return. So it's really, personal information to us isn't important, and we don't really want it because that's just an unnecessary risk as a business if we don't need it. Um, and then API connections. Not 100% sure if you're talking about like our crypto integration. So if you want to connect with like Coinbase, you could connect with your API. If that's what you're talking about, we have a ton of those API connections. Yeah, feel free to throw any follow-ups in the chat, but hopefully that answers it. Okay, so I've gone through your integrations, your accounting integrations, the address book, and the rules. Just real quickly, your treasury. This is all the ins and outs of your business. It's literally just the ins and outs. We're not taking into consideration like trades or anything like that. So this business had, an inflow of a penny and an outflow of $300. Thanks, Taylor. You bankrupted this company. Um, Okay, cool. Moving on. All of these here synced, ready to sync. These are all basically transactions that you'll push to zero. So anything synced basically went to zero. Anything ready to sync, you can see here, you can basically just push it to zero. So you can see sync to zero in progress. Obviously, you can kind of bulk do these. You don't have to do them one by one. Not ready to sync means there's probably some error in here. Likely not mapped to the chart of accounts, right? So you can see how this doesn't have an asset account it's mapped to. So yeah, you can also see comments. So a lot of CPAs like to make comments on these transactions. If you're collaborating with your coworkers, you can say, Nick changed basis to $0 or something like that. And then I can go in and I can change the basis to $0 and kind of just make sure everyone is on the same page. Edit history, so you can see if I changed any of the data, if I changed the date, for example. Oh, sorry, this is locked. That's why I can't edit it. I was wondering why that was. So if I were to unlock it, I can change this and then that would all appear here. Any changes you make, and I just really quickly want to say this because this is an important one, will show up on this audit transaction report. This audit transaction report is also very good for complying with the safe harbor. So let's say you switch from per wallet to universal, and now you need substantiation that that actually happened in your data. You can download really a bunch of different reports. You can do start of the year holdings report. You can do a bunch of different ones, but what this audit transaction report has is the ever important timestamp. So if the IRS says, hey, you need to do this by this date, or your first trade is next month or whatever, and you downloaded this today, you can give it to the IRS and say, hey, I complied before the date of my first trade. I'm using specific, identification allocation. One of the rules is I just have to comply, by the date of my first trade. Well, this is how you do it. You can say, hey, IRS, here you go with my, obviously this set is universal, with my per wallet and my FIFO generated on January 9th of this year. This is how I complied with safe harbor, right? And then you can see all of your unmodified transactions. You can see all of your modified transactions, basically giving the IRS complete insight to everything you've done in CTC, so they can show that you're not a bad actor. It's also just good for record keeping purposes. Again, start of the year holdings is always good. I would recommend every CPA download a start of the year holdings, or an end of the year holdings, if you want to call it that, every single year. So when you reconcile your data, you can always look back to that and make sure all of the accounts match up. So what does
That's a
that
key
look
thing,
like?
because I think that's a lot of this kind of transition is going to expose a lot of bad accounting that's been done in the past and bad tax work. Just simply because, you can have one software from one year and then switch softwares, and the basis can be overlapping or whatever. You know, a lot of people seek out the best answer that a tax software can give them. And a lot of that is due to the fact that they are either reusing basis because they switched platforms, or they were at Universal one year and, you know, under FIFO, and then they switched to LIFO the next year, which screwed up all their prior data. So I think that this is going to expose a lot of bad tax and accounting work. So having these end of year reports is what you can use to substantiate, like you're saying, those basis lots at the end of each year and then moving forward.
Absolutely, yeah. And I'm always on the side of, I mean, that took me what, 5 seconds to download that report. Download all of the reports and save them in a file for your client. You never know when you're going to need them. You're never not going to know what you need. Do it multiple times throughout the year. Like if you just made a ton of changes to the account to reconcile their data, download the audit history report. If your computer blows up in a fire or you lose the password to your account, or you know, whatever reason, you have all that data there. So I just always err on the side of caution, especially when I'm working for my clients. Doesn't make sense to not do something that takes 5 seconds to prevent future issues down the road. Save myself time as well, right? Okay, I think that's basically the general overview of CTC, all of, you know, not all of, a lot of our features, the tax year locking, how that relates to the safe harbor, how users can download reports to justify their safe harbor switch, to justify their universal to per wallet switch. Taylor, is there anything else maybe I haven't covered, or Brandon, same to you, that I haven't covered, or if there's any questions that I haven't covered from anyone on the call, feel free to throw them at me.
I not that I can highlight. We'll kind of open the floor to folks if they have any lingering questions about this and the process. I think it's just great to, you know, we hear a lot of theory of how this is going to work, but to see it actively happening in one of these softwares is really great, because it just gets people primed for what they're going to be going through. I mean, a lot of people are probably already diving into this if they actively work with tax clients, but for those who kind of maybe don't start this stuff for another month or so, it's good to get a nice initial view into what it's going to look like and how those steps are going to kind of go through. So especially understanding what the logic is behind it as well, because we need to be able to explain this to our clients, and I think all of that is important. So any remaining questions from folks?
I just have one more quick thing I want to bring up, which is, and I'm sorry I didn't do this before, which is our settings. So in your client settings, there's a bunch of different things you can do. Tap on our back a little bit. I think we have like twice or 3 times as many tax settings as any other competitor. So you can really customize this software to do what you want. So you can see here's where you make the switch to buy wallet, and then you can refresh the calculations. Make sure you have your locked period set in place so you don't impact any of that. You can change it to FIFO, right? You can change your time zone. And here's where some of the big settings come in, right? You can split fees, you can identify bridge transactions, you can treat airdrops as income. Right now, this is off, meaning airdrops are not treated as income. It's not a default setting, by the way. Default setting is airdrops are income. I've just adjusted these so they're some of them are a little wonky, but yeah, basically all of these different toggles that you can do to customize the data how you want it, right? Tree mining is income, yes. Staking rewards is income, yes. Royalties is income, you know, yes. Or if you're in a country, you can turn it off. That doesn't support it. Yeah, go ahead, Taylor.
So for the most tax effective setting, is that going to just go lowest gain or, you know, greatest loss, or is that also take into consideration long term versus short term, or is it just strictly the number of the game or magnitude of the loss?
Great question. This does not take into long-term versus short-term. It is the number of the gain. So if that gain means we use a long-term cost basis because it makes it lower, that's what we'll do, but it doesn't necessarily take long-term versus
Oh,
short-term
okay.
into account, because we don't know like
Okay.
their tax bracket. They could be at
Right.
a
Yeah.
low 20% or 12% or something.
Cool. Well,
but
if no
yeah.
one else has any extra questions, this has been wonderful. I really appreciate you taking the time to do this, Nick. I've gotten a lot out of it. I hope other people have as well. So if folks want to get in contact with you, I sent the this information also in the chat, so it's easier to just copy and paste. Yeah.
I got one quick question.
Yeah.
Yeah,
Mhm.
just to follow up, just so I understand. So when we go into the client's account and there's tax settings, do we do universal and then we lock it? And then, or
Correct. Yep. So
Okay.
this, as soon as you click this, and
Well,
maybe
wait. If they were previously on Universal, whatever they were previously on, you would want to lock it first. So you don't necessarily have to
Correct.
switch. My understanding, you don't have to switch to Universal if they were never on Universal. They were always on wallet by wallet. They're in compliance.
got it.
Yeah, exactly correct. If you're on wallet by wallet, boom, leave the session now, you're good, right? If you're on Universal, lock it before you switch, because as you see, like the second I click this button, it
Yep.
starts to like refresh the calculation. You do not want that to happen before you have locked your periods, because you
Got it.
kind of just screwed yourself out of any edit you just made.
Perfect. Thank you.
Makes sense.
Mhm.
Great. Thank you so much, Nick, and CTC for this demo. Just a quick reminder, if you're not already in the Crypto CFOs community, the link is in the chat. You can join for free and you will get automatically updated for future demonstrations and CPE events and so many more benefits, networking, and so much more. The link is there. Membership is free. Feel free to join there. The recording of this will be up in hopefully by the end of the day or tomorrow. So you can always reference that.
Yeah, if you have
and
any
ask-
colleagues or any people that you want to get in the community, send out the link. It's fully open. So yeah, we want to get as many people in there as possible. So feel free to post about it, send it over to colleagues or whatever.
Perfect.
And if you want to see any specific content, reach out. We want to hear from you guys. I know that we saw in the community that people are looking for more content on Sol. We did a deep dive into like the issues with Sol, but we're gonna source someone to come in and talk about like how to get around those barriers that the underlying data on Solana kind of creates based on how the wallet structures are done. So we'll do a more in-depth analysis of that. But if there's any other specific topics that people want to hear about, just reach out. If I'm not an expert on it, I'll find someone that is, and we can have them talk about it as well.
Perfect. Sounds good. Have a good night.
Great,
All right,
guys. Thank you so much. Take care, everyone.
Take care.
Take care.